Good morning, all of you. Today we start uh, today's session for the 2nd of Feb, that is the first trading day of the month. And we'll start with analyzing the economic calendar for today. So we'll try to analyze that what are the data which have been released and how they have impacted the market. And after that, we'll see that what are the data which are still pending to be released and try to have an idea that how the market is going to react on the upcoming data. And in the last, we are going to discuss the technical things on the chart. So without wasting time, let's have a very quick sneak peek on the today's data. So for the Australia, we have the PMI data, and we have seen that Australian figures are quite impressive, and we have seen that Australian dollar are getting strength, right? Then for the Bank of Japan, we have the summary of opinions, right? So this is the statements which will have an impact on the upcoming monetary policy or any actions taken by the big Bank of Japan. Currently, they are facing the debt issue, and analyzing JPY is quite necessary at this point of time. So we'll see that how the market have reacted, and the same S&P Global Manufacturing PMI we have for the Japan, because Japan is a export oriented country. And if we see the figures, so it is around 51.5, which is above the benchmark, and it is an indication that economy is in an expansion mode. Moving ahead, so for the China also we have the PMI data which is still above the 50. Still it is a good sign, and when the signs are very good for the economies, it's a bad sign for the precious metals or non-yielding assets. Moving ahead, so for the Australia, we have the commodity prices year on year. So previously it was in negative. We have seen an improvement, and currently the figure is at 2.6%, which is the positive thing because Australia earns a lot of foreign remittance by exporting the commodities, right? Especially the precious metal raw materials. Then moving ahead, so for Germany, we have the retail sales data, which is in positive but not that impressive figures. Then for the GB, that is the Great Britain, we have the nationwide housing prices, and this is the leading indicator. If you're trading into the forex, this is the most important data. For Mexico, because the foreign exchange reserve data is quite important for me, and I always emphasize on this data that you should have a keen eye on the central, because this is the only data which will give us the uh, very calculative impressions that what the central banks are right now doing on. So we have seen a minute spike in the foreign exchange reserve of the Mexico, and Mexico is one of the important trading partner for US. Then later on the day for the South Africa, we have lot of T-bill auctions, right? So these are the short-term bill auctions. This is very important, right? Lot of people, those who uh, trade with South Africa, especially in terms of minerals. So they used to manage their risk or hedge their risk by buying their treasury bills or doing money operations. So we need to have in focus. Then for the GBP, we have the manufacturing PMI data. 50 is the benchmark, and the probability and the consensus is also for the 51.6. That means the economy is doing good. Then we have the Bank of England Breeden speech. So we need to see that what kind of indications or hints we are getting out of this speech. So yes, this will be the turbulent time for GBP pairs. Moving ahead towards the US session, so for the Canada, again we have the PMI data, and just before that, 10 minutes before, we have the New York Fed bill purchase, right? And that is the 4 to 12 months, right? This is right now very, very important because New York is the only Fed bank which have the power to intervene into the market and buy back its bonds, right? So if they are doing their debt restructuring or debt servicing, so buying their short-term bills is very important, and they have this power, right? I have done a lot of research, and in the upcoming weekend, we are going to have a webinar on this topic, that how to analyze this data and how to get insights from this data. for trading, right? So we'll discuss that. Moving ahead into the US session. So we have the ISM manufacturing PMI data, which is below the 50, which is not a good sign. It is an indication of contraction in the economy, and the consensus is for 48.3. So if this figure came still below the 50, so it's not being a surprise. But yes, if data figures came above the 50 mark, then it will be a surprise for the market, and it is an indication that US economy is performing very good at a producer level, right? And due to this, we'll see strongness or strength coming into the dollar pairs, and vice versa is the case for gold. Moving ahead, so at 10 p.m. we have the 3 month and 6 month bill auctions. So we have to focus this data, right? And then at 10:55, so this will be the most uh, catalytic event for today. That is the Bostic speech, right? He is one of the Fed president. So we need to see. We'll get a lot of hints that what because in this month they are not going to have any FMC rate cut meeting, right? In March we have, so we need to have a focus on this data. Now let's analyze the CFTC data, because we have seen a lot of profit booking and a very sharp fall into the prices of gold and silver. There are a lot of factors which are impacting. And if we want to see the footprints of that if yes, is this a profit booking? So we need to analyze the CFTC data. So just bear with me for a 2 minutes. Let me open the CFTC data, and then we'll see that what this data is telling us. So I'm opening the short format report. I hope my screen is visible. Let me have a look. Yes. Okay. So this is gold over here. So we'll have a focus on gold. We have seen that when we have discussed the CFTC previously, till the date of January 20, we had the data, and we have seen the 1 is to 6.5, 1 is to 8 uh, of contract spreads, right? That means the hedge ratio is very high, right? Now the producers and merchants, they have long contracts they have booked, and the short contracts also they have booked. So it's still they are balancing, right? And if we see the long and short, so for 15,000, almost 15,000 contracts they have towards the long side, and 55 contracts toward the sell side. So if I do the calculation, it is almost 1.3.5 something, right? Still the sell side is heavy, right? So now we need to see the managed money. After that, we'll discuss the swap dealers data, right? Because whatever these two parties are doing, swap dealers are providing services to both these two parties. That is the managed money, which is the hedge funds or the institutions, and the producers and merchant and processors of gold. So for the managed money, they are holding 25,000 contracts, and for the long side, they have 143 contracts, out of which they have booked 20,000 contracts. It's a very big booking into the contracts, right? For the short side also, they have booked, right? Only 1,000 contracts. So still, if we do the math, so again, 1 is to almost 5 or 4.7 or 4.8 ratio we have, right? Now, if we see the swap dealers, so swap dealers just do the opposite, whatever the other parties are doing into the market, right? So if they are more bullish towards the goal, so they have their short side heavy. And if we have a look, they are holding 34,000 contract toward the long side, and 241,000 contract for the short side, right? So for the short side, they are still very heavy. So that means still the managed money is towards the buy side. Producers and merchants are hedging their inventories by creating the this market. So that means whatever downside we are seeing, has its limitations, right? Because still the swap dealers are quite heavy towards the short side. But yes, The only thing which we have to keep in mind and which is a point of worry is that they are holding short side contracts on a very heavy level, that the ratio is very high. So if prices are falling, their short side positions are in profit and they are going to hold that positions and book profit. So you see a sudden spike towards the downside into the price, and all of a sudden there is exhaustion, and the reason behind is because they are doing the profit booking. So we have an idea over here. Over here we have the number of traders in each category. So how many number of people or the parties are, whether there is an increase or decrease, right? And over here we have the percent of OI, which is also important, right? So it has been given that on which side the OI has been increasing. So yes, we have an idea now, right? And today's Tuesday. So from past Tuesday till this Tuesday, whatever is the data is going to be made public on the upcoming Friday. So we'll have a look. Till the time we need to keep this past data into the mind, that what happened into the prices and what is the reason for the sharp fall in the prices. And apart from this, CME have increased the future margins, and because of this also the storing cost, right, or the managing cost or doing the arbitrage or hedging cost is going to get increased. And the parties who are the big players of this market, they are going to cover up that cost by booking the profit into this market through futures and options. So we right now we are just focusing on the futures market. We are not discussing the option market. Now in the last, let's have a look on the CME Fed Watch tool. So it will give us an sentimental idea that is there any kind of shift for the March data, that whatever trading in this month is going to happen, it is going to represent that what the traders are thinking of March, right? What will be the FOMC decision on March, whether they are going to cut the interest rate or they are going to hold the interest rate. So let's go to CME Fed Watch tool, right? So now we have the 44 days almost remaining, right? And the chart is loading, right? So still it is at 85.2% people are towards that there will be no interest rate cut, and the interest rate would be around the bracket of 350 to 375, that is 3.50 to 3.75, right? So there is no change into the prices, right? Still the things are same, right? And this is an indication of the interest rate is at a very high level. That means dollar denominated assets are going to give you more yield. And apart from this, if the labor market data and the macroeconomic data is also improving, so instead of investing your money in a non-yielding assets, people tend to shift towards the yielding assets, right? But yes, for that we need geopolitical events to be very low, right? So if all these cases are in sync, then we can think towards diverting our investments into the indices and riskier assets like stocks and all. Right. And apart from this, the debt issue, because keeping interest rate low is very important, right? At some specific point to do the debt servicing, right? We'll cover this on another session. Now let's move on to the technical charts. So just give me a minute. Let me share my technical chart. So I hope now you guys have access to my screen, right? So this is the gold on a 1 minute time frame. Let me discuss this on a H1, right? So over here we have seen a very strong downtrend or the free fall into the prices, right? So this is on our daily time frame. We have seen the prices went down, right? Here we have the resistance or the demand zone from where we have seen the exhaustion in the candle, which is a sign of weakness. And yes, after a fall, uh, if we are optimistic that there might be a correction for the upside, so it is not wrong, right? Apart from this, I have identified a very important structure on a daily time frame, which is called the bump and run pattern, right? So if I draw my trend line like this, right over here, so this would be my strong trend line towards the upside, right? And from here we have a pump into the prices, right? Right. So this is called pump and run, right? And right now, this trend line have been broken. Prices have taken support from the trend line, right, which I've drawn. And right now, it is trading in a range, which is an indication of a sideways movement on a daily time frame. But yes, for the intraday traders, these three strong bullish candles have given us a sign that yes, we have a V formation at the bottom. I'm not using any indicator right now. So the probability by looking into the H1 time frame is quite high that yes, prices might go towards the upside, right? But the average range or the ADR value, right? Average daily range value of the gold is very volatile. So nowadays, if you're doing intraday, you need to switch your time frame towards the 5 minute, 15 minutes, or 1 minute time frame. So currently, I'm using 5 minute to see the market microstructures and try to identify whether I'm getting any good trades towards right now or not, right? So if we see that yes, we have the bottom, and right now we have a lot of exhaustions and the consolidating area over here, right? So we can easily identify this congestion over here. And if I draw this resistance, so right now prices are entering into the resistance, right? Now let me switch towards the M1 to have a micro globe. So see this, let me make it smaller. So this is the area which we have drawn, right? And still the prices, it's towards the upside. But if we see the RSI, right? So, and I'm using the RSI for a very smaller time period, which is of 5 only, right? But yes, on a smaller time frame, you can increase the RSI value to 10, 15, or 14, whichever suits you, right? 14 works very good. So prices have given a very strong impulsive movement towards the outside, and right now they are kind of taking a U-turn toward the downside. But looking at the current trend, uh, we are very much towards the buy side. But yes, to take a buy towards the upside, we need a confirmation, a rebounds, right? So for that, I can use this current order flow. I wait for the prices to take the correction, right, till the mid band. So for that, I can use the Fibonacci retracement, and prices will take the support from the 50 to 61.8 level. And if I find any sign of reversal, there are two signs of reversal. That is the lot of bricks formations, right? A pin bar kind of candlestick formation is there. And along with that, I have my RSI below the oversold area. If both the things are happening in a sync, so I'll think of taking a buy call. Next, move on to the US oil, right? So we have a tremendous gap down into the prices, right? I've identified the Friday's microstructure, right? So this is the market symmetry which we have identified a small channel, right? We have two fake breakouts towards the upside, then a downside, right? And then again the prices close within the same ascending channel. And today we have a very big gap down, right? And prices are going down. On Friday also, we have seen the rigs count data, right? So the rigs count data have also surprised. The number of rig counts have been decreased, right? This is one reason. And right now, if we focus to find any kind of intraday trading opportunity, so yes, we have a bottom formations, and this low has taken the liquidity which are resting below the low of this candle. So we think of prices are going upwards, but yes, if we see the current swing action, so broadening wedge formation is there into the page, right? And it is giving me an indication that yes, prices might tend to trade within this specific range. So we can see a lot of turbulent movement towards the up and down, right? So you need to have your psyche according to the microstructure, right? And due to this, I'm expecting prices to go up, although there is a fair value gap formation. That means the imbalance, right? And I need to clear once the candle clear this imbalances and prices sustain successfully above this fair value gap area, then I can take a buy call by keeping my stop losses below the low of this candle. But yes, from this ascending line of the wedge which I've drawn by the blue club over here, if you find rejection into the prices, you can think of taking the sell and for the target below the low, right? So at least we have three lower low formation in a wedge pattern. So this is the market symmetry for today. Then move on to the GBP USD or Euro USD. So both are right now at a strong support area. And why it is a support area? Because in the previous week, this is Mondays, right? over here. These two lines represent the start of the week, and you can see we have a consolidation into the prices, and on Tuesday we have a sudden spike towards the upside, right? And if I talk about today, so still it is trading on the same range and getting rebounds, right? So they are gaining good energy towards the upside from the same area. So yes, although the trend is uh, being very weak, but yes, I have drawn this pattern over here, right? So the probability of prices go up and test this area is quite high. So those who are want to catch this much pip, they can catch, and from this area the chances of reversal is quite high. So if you find reversal, you can take a sell call, and if prices successfully surpasses this area and again came back into this area, then we think of taking a buy call. And for that we have lot of PMI data, right, for the USD also, for the GBP also. So we need to have a focus on this also. Now in the last two things are remaining. That is, one is the indices and one is the Bitcoin. So first, let me take the Wall Street 30, which is the US 30, right? So a very bad week we have seen, right, which is the previous week. And in this week, the prices have started by prices went down, and then again they are taking support from this area, and right now they are gaining momentum towards the upside. The thing which is very important to keep in mind is that every time when the prices goes below this area, we have seen a lot of rejection into the prices, right? And all of a sudden we have seen a strong surge into the volume activity also, which is the tick volume, which is an indication that yes, from this area accumulation is being done by institutions, right? And right now we have a very strong imbalance into the candle, right? So this gray area would act as a very strong area, right? And still if we see the prices are trading above this range, so yes, wait for the prices to give you a correction. We are seeing this into H1 time frame. You can use M5 or M15, right? And you can go to 15-minute time frame and wait for the prices for a reversal. And if that reversal is done and again the prices are getting upward, taking buy would be very good, right? So this is by looking onto the H1 time frame. Now let's have a look on daily time frame also. So on a daily time frame also, we have a rounding top formation, and still the candle are giving us lot of exhaustions rate, which is not a very good sign. But yes, it is the first quarter of the day, right? Still the US session and the London fix time is important, which called the London fix. So yes, we'll are expecting a lot of volatility, right? Until the time the today's high is not broken, I'm not think of taking a buy call, right? For that, I need the confirmation. But yes, if prices are being trading above the 50 level of today's range, it is an indication that lot of accumulations are being done, right? And the next target would be the stop losses, which are resting above the high of this area. And for that, we have seen the H1 time frame over there. We have a very good imbalances if prices getting been removed from that area. So it will be a good time to take a buy call and support the market to hunt the stop losses. Those who have kept their stop losses over here. In the last, we have the BTC USD on a daily time frame. So this is on daily time frame. This is the candle formations. This is Sunday's candle, right? This is Saturday's candle, right? So we have seen that there is a strong trend towards the downside, and this is the zone which we have identified, right? Which will be been discussing in all our briefing sessions, right? But prices have successfully break it. But yes, still one correction is pending of this area, right? Which might be into the picture, and by looking into the current price scenario, so this is called the star in the south pattern, right? We have one strong candle, the next candle failed to give us or renew the low of the previous candle, and same is the case with the next candle. So might be today we won't find any good trade, right? But yes, after this, chances of a reversal toward the upside is quite high up to the level of this zone, right? So maybe on a daily time frame, nothing seems very promising, right? But yes, let's have a look on H1 time frame to identify any intraday trades, right? So this is the previous day formations, and if you see the market symmetry, so it is looking quite weak, right? And this is the low which have not been taken by the market a lot of time. It have tested, and right now the prices are getting the impulse for the upside, right? But still, um market symmetry is not that good, right? And this is the trend line. So I wait for the prices to clear this area first, then my biasness would be correct, and then I'll take the call, right? Okay, so that's all for my side. We have covered all the market segments. We'll meet tomorrow again. Due to some official work today, we have postponed our meeting. But yes, for tomorrow, the timing will be the same, and we'll meet again with lot of new pieces of trivias. And from tomorrow onwards, we are going to start a new call to discuss those things which are being kept secretive for the retail traders. And I'll give you a lot of resources and insights through which you'll have an idea that how to take any script's reference price for that day, right? If reference price means the magnetic price, right? So that is the price which decide the mean of that day. So if prices are trading very higher above the mean, high probability that it may correct towards that mean, right? Same is the case for the downside scenario. So that's all for my side. This side Anurag, signing off for today. I hope you have a great trading day ahead. Thank you all. I just request all of you to kindly leave the Google Meet room, and please keep all the things which I've discussed right while trading into your mind, and have a great trading day ahead. Thank you guys. Thank you all of you.